The market is in limbo. Everything is set, pending a trigger. In today's video, we'll look across major asset classes and highlight moves in key indices, commodities, and even the coin universe. When the market hesitates, we'll listen to the charts, and they are getting loud. And as usual, today we start with the volatility index. So what we are having today is a very concerning closure on the daily frame. So first of all, this is the second green candle on the index itself, and it is right now looking very bullish. If we have a confirmation tomorrow, especially if it breaks above the 200 days moving average, it could be a strong reversal. And on the futures, the situation is even more concerning because we have a bullish engulfing candle. So tomorrow is a good chance we'll see a spike in volatility. And if we look at the weekly candles, so far last week we had bullish candles. So how they are going to play this week, it is still unknown, and we will look at it. So in order to cancel these bullish candles, the current red candles need to close above the previous week low. So if they don't, it will be either neutral or bullish depending on the level. So this is a close watch. Now let's have a look at the dollar index. So for the dollar, we had a very strong move today. We had concerns about the health of the rally, and we have a bearish engulfing here. On the daily frame, most likely the dollar will go down tomorrow. However, if we look at the bigger frame, let's say this is a 3-day frame, it's not necessarily a bearish continuation candle. Most likely it's a bullish hammer, and it could be a hammer and a harami altogether, bullish harami. And if we see a very strong move in the next 3 days, well, that's gonna be a potential bottom. And the same for the weekly frame, depending on how it closes. So right now it's open for both bullish and bearish formations. Speaking about the Elliott waves, it's an interesting story here. So first of all, I'd like to say that yesterday I discussed already that there is a potential for an impulsive structure here, and I would be treating it as a truncation of a much larger wave. And if we remove this one for now and have a look at this wave that dollar formed off the bottom, and this could be a perfectly impulsive wave, by the way. And if it is, then we could see a pullback here without making a new lower low and another strong move higher. So far, this remains a possibility. And if the door will be closing this wave, I think that an ideal structure for this condition would be a very sharp and short move down to complete this potential ending diagonal, which I marked here. And after that, we would see an impressive move upward. So far, everything is not clear, and we will be looking for the monthly and weekly closures tomorrow. So they are going to be very, very instrumental. But I'd like to say from technical perspective, it looks like dollar is seeking a bottom right now and forming one. Now let's have a look at the bond market. And we will start with US 10-year yield. So what we are seeing here is that bulls lost, and this they had a chance to close above this line that I discussed yesterday, and if they did, it would be a clean bullish continuation, potentially reversal, and the move upward. However, they lost, and so far this candle looks bearish. The chances for a move lower are fairly significant because it's a loss of two major support points. And for the weekly frame, we would be looking for probably a reversal too. However, However, if we look at the monthly is going to be closing with a bullish candle, unless we have a super strong drop tomorrow. So far, the candle is bullish. So what I think will happen next, that at the beginning of June, we might see, following this candle and following the daily candle, we might see a move like this, for example. So this is the big green candle which remains active, and it's pushing for higher prices. So we would be looking for this particular correction and a move higher, probably closer to the end of June. So that's this is the potential path. Maybe 1, 2, maybe even 3 weeks of slower moves down, finding the middle point here, and then the move up. So I'll keep this in mind, and this is the perspective for the yields. So if we look at the 20-year yield, so technically it is somewhat similar that we discussed yesterday. So I think that the red count is very close to invalidation right now, and instead of an immediate move upward, we would be looking for an extended wave 2. Alternative 2 is an ABC, and after that we would be expecting another move higher. So maybe somewhere time-wise in the middle of June. Well, I will do some cleanup for this chart by the end of tomorrow, and we'll discuss it at a greater length, and also from the bigger perspective in our weekly digest over the weekend. So now let's talk about the all maturities, 2, 5, 10, 20, and 30 years. So they all closed today with yields closed with bearish candles, signaling a move lower. However, I'd like to say that technicals are not strongly supporting this move. So most likely this move will be short-lived, and some instruments will find its bottom fairly soon. So let's discuss it tomorrow in the weekly, once we have the weekly wrap. So speaking about TLT, TLT is in a very interesting position right now. So daily, technically, it's overcame this bearish candle and closed with a green one, signaling a continued move higher. The same might happen for a 2-day frame if it closes above this the high of this doji. The weekly, however, it's not decided yet, and if it closes tomorrow below this purple line that I put here, so technically it's the previous week's high, so it is going to be bearish, and or at least neutral. So let's see how it develops on the weekly frame, and technically it wouldn't be a surprise if we see TLT pushing slightly higher before moving lower, similar to what I am expecting for the yields. And this is the perspective for TLT. So far it remains unchanged, but if we see a move tomorrow, we might extend this wave to somewhere here. So we might be looking for this type of corrective formation. So it would be ABC somewhere here. Again, we will discuss it once we have a clear picture, but this is another possibility for wave 2, and return this one here and mark another with another color. So this would be wave 2 here. So that's the perspective for TLT. Let's see how it closes tomorrow. And now let's move on to commodities. And start today, we will start with oil and some oil companies. So first of all, I'd like to say it was an epic failure today. Yesterday in our written report. We discussed the potential for oil to form a bottom on the 2-day frame. It just needed to move about 3% from where we discussed it later tonight, last night. But unfortunately, it stopped halfway and returned back. So forming practically a strong bearish engulfing and just confirming the N8 by 20 EMA bearish cross. And I would say this rejection at the 50 days moving average is significant. Now we are looking for a solid continued move lower on the daily frame, 2-day frame, and the weekly. Most likely, if it pushes a little lower, it will just reconfirm a reversal. Speaking about the Elliott waves, this is the chart that we've been tracking so far. We have an impulse down 1, a potential corrective wave 2, and this wave down looks surprisingly, or not surprisingly, it looks impulsive. So perhaps it will push a little lower here just to complete wave 1. Then it will be bounce for wave 2, maybe longer, maybe shorter. That's we don't know yet. And especially if it breaks through at a new lower low here, then we would be expecting a continued move down. But remember, this technically this would be wave 3 overall, and so we might see very sharp retraces and very strong moves down. So that's the perspective. And just one more data point. Brent also closed today with a strong bearish candle, looking for lower prices. So if somebody expected it to move towards 65, 66, well, they might be disappointed. Brent has much better chances to move towards 61, 60 range. And this is a freshly made, well, it will be completed in 1 hour. It's an 8-day frame, a strong bearish engulfing. All technicals are intact, and the chances for a move lower in the next 8 days, 2 weeks, is very high. And the final discussion on oil is this one. Tomorrow, Exxon, Chevron, and Conoco will be looking for bearish closures. So far, the candles shaping up as bearish, and for Chevron, it looks like a harami right now, but in the bigger context, most likely it's gonna be just a consolidation one. And I think it's time for me to do a midterm analysis for Chevron and share information, share the prospective targets, because Chevron right now is not doing well. If we look at these moving averages, like a 200 days VIX moving average and the freshly made cross 50 over 200, well, it's not a healthy sign at all, and we are looking for a continued move down. So just tune in for our midterm forecast. Now let's talk about natural gas. So what happens here? So first of all, I'd like to say that the candle today technically is bearish, and there is a chance, significant chance for a move lower. However, the structure of the candle is closer to the neutral, and considering some very weak technicals, there is a chance that natural gas might be forming a bottom, but we will know about it only tomorrow. So far, the weekly is shaping as bearish. However, if I'm looking at the monthly frame, the monthly is technically bullish right now, and it would need a lot of effort to make it bearish. So far, it is holding about the 2 months moving, 200 months moving average here, and we have a cross, bullish cross here. So the monthly odds are still bullish, and they are unlikely to shift tomorrow. But anyway, we will see the closure. So speaking about Elliott waves here. So I am still thinking that there is a possibility after an impulse up, there is a possibility of forming wave 2 like this. And unless natural gas makes a new lower low here, this formation is still intact. Let's see what are the moves that natural gas makes tomorrow, unless it doesn't make a new lower low here, which will be treated as an alternative wave 2. So this impulse is still possible. Well, now let's move on to the next commodity, and this is gold. So gold today made a very critical move, and we are going to talk about it in just a few seconds in Elliott wave section. So, but from the candles perspective, this is the bullish engulfing, and I would be looking for higher prices in the next day or two. Speaking about the 3-day frame, it's a different story. So now we have a harami, or potentially a big hammer, or hanging man, if you wish. So this is a bearish formation, and for the next 3 days we should be very careful. While the daily is bullish, so the day or two might be bullish. The day number 3, which will be Tuesday, next Tuesday, might be very critical. And speaking about the weekly formation, so far it is shaping as neutral, but the monthly would be really interesting, but it's only tomorrow, so we will discuss it. So speaking about the momentum, it's very interesting one. So the 3-day momentum MACD is still bearish, and despite 3 green candles, it is moving down. It's a very surprising development. And so far, this candle, if it closes like this without closing above the previous 3 candle high, it will be bearish. And on the 5-day frame, we are seeing that MACD is getting closer to a cross, and these 3 candles could be just a setup for falling 3 methods following the inside down candle. So the momentum is building bearish slowly but surely. This is something of concern. Now let's speak about Elliott waves. The ugly move that I mentioned earlier, this is this one. If you watched our video yesterday and before, I discussed 3252.05. It's must not cross line, and the gold did exactly that. So technically it is right now it broke the impulse down, invalidated it, crossing lines 1 and 4, and the only way to continue upward right now and finish at the new all-time high would technically be an ending diagonal, an expanding ending diagonal. So somewhere here, maybe we'll see it in the next couple of days or couple of weeks. However, at this point, I would like to say that the chances for an immediate move lower, which I also discussed yesterday, are higher than before because of this move. So because ending diagonals might not complete, but now we have a broken impulse, and this could be a possible wave 2 of wave 3. So we would be watching right now, and I'd like to say that gold right now is at an inflection point right now. Well, and speaking about the GOD trust, the candle today was bearish, despite the fact that GOD gained, and this could turn into a spinning top, and the weekly closure tomorrow will be instrumental. So far, it is shaping as a bearish harami, and it doesn't really matter which color of the candle it will close tomorrow, whether it's going to be a red one or a green one. I think the red would be slightly more bearish, but in general, in order to close this frame with a bullish candle, it needs to close above the previous week high, which would be a fairly strong rally, so about 1.5%. It's just possible, but questionable. Well, that's all for gold, and now let's move on to uranium. Let's see what another instrument is telling us. So, as we discussed before, that was a big alert for URA candles, especially for this one trading above Bollinger Bands. Now we have a confirmation that this was a true alert. So this is the bearish engulfing, a fairly strong one, and we can have a big chance to see lower prices for this instrument. Speaking about a quad U, it's even worse. Right now we have a technically confirmation on the daily frame, and we would be looking tomorrow for a bigger frame to confirm. A very strong move down might flip the odds on the daily, on the 2-day frame, and also on the weekly, which is already shaping as a dark cloud cover, incomplete by the way, but a little lower and below the midpoint, and we will see a much stronger bearish candle. And speaking about the CCJ, Chemical Corporation is the same story. So we have a spinning top. Now we have a strong bearish engulfing two previous candles. On the 2-day frame, the same story, and the weekly will be a true signal. Speaking about the charts, we will update them in our weekly digest for all three instruments. So don't miss it. Now let's move on to coffee. So what we are seeing here is that coffee is falling, and those of you who remember this chart that we shared at the beginning of May, we called it when coffee was 388. Right now it is falling down, and technically it lost already 10% in just 3 weeks. Well, the chances of moving lower are significant at this moment, and we will be discussing multiple perspectives for coffee candles and also Elliott waves, potentially bigger ones, in our weekly digest. So don't miss it. Now let's talk about the market, the stock market, and we will look at all indices all together. So another critical event happened today. So yesterday we discussed that S&P 500 and Dow Jones marginally recorded MACD bearish crosses on the daily frame of a record magnitude. Today, Nasdaq, the last one, joined. Now we have 4 indices, 4 bearish MACD crosses, and if we look at the candles, so the candles are not there yet. So these could be bull bearish, but there is still a chance of reversal. So it's not a confirmed reversal yet. For Russell, situation is much worse. So it had a bearish engulfing yesterday, and today it didn't reverse it. So it's not a confirmation, but it's not a rejection yet as well. So all 4 have very strong perspective for closing bearish this month. Now let's have a look at the futures. So the futures already closed. What we are seeing, it's absolutely the same scenario. We have MACD crosses, and we have technically bearish candles. The only one is neutral bullish is for Dow Jones, and it still gives us hope for tomorrow, and the futures for Russell are also somewhat neutral, even bullish. That's very interesting, and I'd like to see how it closes tomorrow. So this is the monthly frame, and so far all candles, all monthly candles, except for Dow Jones, I think, yes, except for Dow Jones, all monthly candles looks like a bullish engulfing for Russell, possible tower bottom for Nasdaq, and the inside up for S&P 500. So Dow Jones is the only one that is still needs to push a little higher in order to make it bullish. But this is monthly MACD bearish cross of record magnitude. The previous one of a similar magnitude happened in January 2022, and we remember how it ended. It was almost a year of decline. So that's the concern, and tomorrow will be a very critical move for the markets. If we see a strong sell-off, then these candles can transform into something bearish. So for Nasdaq, for example, in order to not confirm a bullish reversal, it just needs to drop about 1.4%. So as little as 1.4. So for Nasdaq, it's not a big deal as far as I remember. Well, that's the perspective for tomorrow. Let's see how it closes. So far, we have technicals on the daily frame and on the monthly frame that support a move lower. Now let's have a look at the Elliott wave. So this is the chart that we've been tracking, and overnight it's been a very strong rally, and the S&P 500 made a higher high. However, all three counts that we've been discussing before remain on the table. So the green one, the purple, and the red one. So everything is clean here. The risk here is potentially forming a double bottom, a double top, if there is a strong move down tomorrow. Now let's have a look at the shorter frame. This is the 5-minute chart, and what I can see here is today S&P 500, I'm talking about futures here, formed a very strong impulsive wave down. I tried different counts, and I think this one is the most probable one. So wave up right now is corrective, and there is a question how high would it go and where exactly it would reverse, because I would be looking for two possible scenarios. One is wave 1 to wave 3 down, and wave 3 down will be huge, just because of the ratios for wave 1. Wave 3 could be extending significantly, maybe 2-3 times the length of wave 1 here. And another perspective that I would be looking is technically it could be wave A of a smaller correction, and this would be wave B of the same correction. So let's see how it develops overnight. So this would be instrumental. So far, this wave could shape up as a diagonal. However, this top here is higher than this one. So technically, this wave could be complete. However, this would be a truncation, and I would expect this wave to move just a little higher into this rectangle. It would be much better from the Elliott wave perspective. So that's the short-term perspective for the index. And now let's have a look at the sectors. So a quick glance over the sectors tells me that all of them are in the waiting mode. None of them confirmed anything. So both all financial, technology, industrial, staples, and the other ones can flip either way with just a little move in any direction. So, but the critical one to watch for is the technology. So we discussed yesterday that technology made a MACD bearish cross, and just to give you the perspective, so this is the MACD cross, so let me mark it here. This is its magnitude, and this is the entire chart for the technology sector for since 2000, since year 2000, I think, since inception. Well, this cross, this is red line, is of the highest magnitude ever. And now we will be looking for return. The question is how far, how deep, and how fast. So the main move has been done. Now let's see how it develops. So far, this candle is bearish, but it's not confirmed yet. I think that tomorrow's closure will give us a clue for the weekly frame, for the monthly frame, and a few more in between. Well, that's the projection for the sectors. And now let's have a look at the big stocks. Today is May 29th. So what I'm seeing here is technically a similar situation for Microsoft, Amazon, Nvidia, Meta, not decided. The only two strong bearish closures were Apple and Google. So these are bearish engulfing, and there is a good chance for them to see lower prices tomorrow. So they are together about 16-17% of the market cap. So it could be a significant impact if just these two go bearish. So for Tesla and for Berkshire, there is no decision yet. So Berkshire might be forming a bottom, but the decision has not been made. Now let's move on to Nasdaq. Let's see how Nasdaq is developing. So this is our chart that we've been tracking since April 22nd. And now Nasdaq is floating just above the targets that we projected back there. So what is happening right now, that on a 12-hour frame, we see a very strong bearish engulfing. 12-hour frame. This is the 12-hour frame. And there is a good chance that Nasdaq might develop something. The wave so far looks impulsive, similar to what we just discussed for S&P 500 on the 5-minute frame. And I would be looking for a continuation tomorrow. Let's see how it plays this candle. In order to reverse it, it would need to close above the candle's high. So that's for Nasdaq. And now let's have a global look from the candles perspective. So these are Shanghai, Hang Seng, Nifty, TSX, ASX, Australia, Japan, DAX, and FTSE. So just a quick look. I think that Canada, Germany, UK, and to a certain extent Australia are in big trouble for tomorrow. A strong bearish engulfing for DAX, for TSX, and technically a confirmation of bearish engulfing for the UK index. Let's see what happens overnight and tomorrow. It could be a strong technical and tactical move for the entire global markets. Now let's have a look at something that we didn't look before. We can see, can say it's a special feature. So these are the Dow Jones 8 biggest stocks, biggest contributors: Goldman Sachs, Microsoft, Home Depot, Visa, Sherwin-Williams, Caterpillar, United Health, and McDonald's. What I'm seeing here is that only two are in confirmed, technically confirmed, a reversal. This is the Goldman Sachs. It's a strong dark cloud cover of yesterday and a confirmation just by a few basis points. It's a confirmation of reversal on the daily frame. Let's see what happens tomorrow with the weekly, but the chances for a move lower are significant. And while the others are not decided, McDonald's is also bearish, and it formed a continuation candle, and it dropped below the 50 days moving average, which is not good, and it made a cross 8x20 EMA bearish cross. I think that McDonald's is up to something big, and if I just look at the chart here, so what we are seeing is this is wave A. Let me make it slightly bigger. So just a quick demo here. Okay, so this is the first wave ABC, and this was wave A of a bigger correction. So this wave upward, most likely a corrective one, and I would be looking for two potential paths here. So this would be wave A, wave B, and potentially this could be wave C of another corrective wave bigger B. And now I would be looking for wave C somewhere here. That's another perspective. And this wave could be either impulsive or an ending diagonal, but it might take several months to develop. So for this perspective, this is it. This is very simple. ABC formation, so the first corrective action, then we have another ABC wave here, and potentially ABC. So the only thing that this wave B could extend even more, and I can see this potential. So this would be wave B, and then it would be wave C. So that's another possibility here. So this would be wave B, and just in red. So that's a more complex wave B here. So this would be B of wave B. So that's another possibility. So this is for McDonald's. So far, I would like to say that McDonald's is not impulsive, moving upward, and it had a chance, much better chance, to resolve down and seek a new lower low somewhere between 290 and 280. That would be my very short estimate. Well, that's the perspective for McDonald's. For Goldman Sachs, I think I'll discuss it over the weekend in one of our digests. Now let's move on to the final part of our discussion today, and this would be Bitcoin. So let's start with the candles. Yesterday we discussed that making a candle to close below this red line would confirm a top, potentially a double top for Bitcoin. So when I'm saying double top, I mean this type of formation. That's a possibility, and we still have 2 hours to go for this candle. There is a fairly good chance. But my focus would be on the bigger frame, which is closing tomorrow. And this would be 5-day frame. So far, the candle shapes as a strong bearish engulfing. Let's see how it closes. And if it closes like this, then we would be looking for the weekly closure, which will be very impactful. And this is the chart that I shared exactly a week ago when I said that Bitcoin is potentially close to forming a strong bearish candle, bearish engulfing, and this is exactly what it did. It on the same day it formed bearish engulfing, a strong one. Then it spent 3 days consolidating, another small bearish engulfing, and now we see a sequence of bearish candles. So this train is getting speed. So this would be the most typical targets for this type of correction, between 82 and 93. Now let's have a look at Elliott wave. So this is right now is Bitcoin is in an inflection point. I think it has a chance to form a bearish flag, an ABC. If it does, and if it makes a strong bounce here, we might see a higher high, but I wouldn't say it would be for a long time. So because we might be seeing a very short wave upward and then a reversal. But at this point, considering candles, considering some technical elements, there is a good chance that Bitcoin forms an impulse down, and this would be wave 3 with the target here. Well, that's the most probable path right now, the blue one. Let's see how it breaks. If it breaks strongly through this potential flag boundary, then I would be looking for much lower lows. And speaking about the health of the coin universe, Bitcoin we already discussed. The other coins like Theta, XRP, BNB, Ethereum is up for strong bearish engulfing today. DOT is up for bearish engulfing. I think ADA is already moving down, similar to what Bitcoin did. And Doji also looks done for now. So it's breaking through major support points. Well, overall, the coins are not in a healthy condition right now, but I would be looking for the weekly closure and see how they close. It would be crucial and instrumental. And the weekly closure comes on the last day of the month for the coins. It will be a double feature from the candles perspective. Now let's move on to our regular feature. So as of Wednesday close, the SPY signal remains cash. Our swing room, led by master trader David, has delivered over 68% in gains just on SPY since inception in January 2023. And I'd like to emphasize on unleveraged SPY trades alone. Discipline and full transparency have been key. If you are serious about trying it, contact us at help@investingangles.com. We'll gladly offer a sizable entry discount for committed traders. And to wrap things up, volatility is holding tension, ready for a flight. The dollar took a hit, but larger technicals are not yet broken. Yields are short-term bearish, but long-term setups flash warning signs, and these could be green flags. TLT is heading for a major candle test tomorrow. Oil didn't catch a break, but our monthly review will be revealing. Check it in this week's weekly digest on YouTube. Natural gas may be pausing. Tomorrow is critical. Gold made an ugly overnight move, a bad look for bulls. Uranium stocks tick like a Swiss clock, just as outlined in the weekly digest. Coffee. We nailed the setup weeks ago for literally cup of coffee trade. S&P 500. The technicals are ready, but candles are still undecided. Sectors. Technology is the one to watch. Nasdaq, a potential brutal move could follow if a special tweet from administration, for example, appears tomorrow. Global indices. Germany, UK, Canada, and down under. Beware. Special feature. Dow 8 largest stocks with Goldman Sachs and MacDonald's in focus. They are bearish going into tomorrow. And another thing that Bitcoin and other coins tops could be forming. Be prepared. If you find value in what we do, hit that like, subscribe, and notification bell. Share this video where smart money listens on X, Reddit, Discord, and other media platforms. Sign up for our weekly digest on YouTube. Deeper long-term projections, setups, and unique features not covered in daily videos. Thank you to all recent members. Your support keeps this independent voice alive. At Investing Angles, we chart the turn before the crowd even blinks.